Okay, so I just want to bring your attention to platinum on the weekly time frame. As you can see here, this precious metal has been in the doldrums for quite some time, but this doesn't discount the fact we are approaching a 15-year low, which really does scream value to any investor. Platinum has not been below this horizontal level, which has been well tested and respected since 2004, ladies and gentlemen, which represents a great buying opportunity for those bargain seekers in pursuit of a discount. And lo and behold, if we zoom in on the more recent price action for platinum, we can see here that we are rapidly advancing this horizontal level. Could this be a W-shaped reversal pattern rejecting this horizontal level? Well, that is yet to be seen. However, one thing that could be worth further investigation is the fact that we do have this potential A, B, C, D pattern rejecting this horizontal level. If we project point D, you'll see a potential overlap. So if we just take this Fibonacci extension from point B to point A, you can see that this horizontal overlaps very nicely and very neatly with the 1.272. So that does potentially qualify the ABCD patterns point D, which is the reversal point. And when we get the ABCD patterns point D reversal point rejecting a horizontal level, then that acts as an extra clue that we could potentially see in this case buyers coming back into the market. So how are we going to be taking advantage of platinum? That is the burning question. Well, there are several ways you can take advantage of platinum. You can take a slightly more aggressive route or a more conservative way, depending on your risk appetite. The more aggressive way would simply be trading this as a power zone, like I mentioned before, in this case, having an order to buy on or just above the horizontal level with a stop loss at a point where if the market does test it, then we can reasonably regard the setup to be invalid. I typically have the stop loss below a point where we've seen price faking out, dare I say, before we've seen false breakouts. As you can see, we haven't actually had any false breakouts here, so I think a very safe point for us to have our stop loss will simply be, if we do get our profit shooter on this, if we did buy on the horizontal level, would simply be to have it at a point where, round about here, there we go, just above, and a point where if price does test it, then we can really disregard this level completely. So there we go. So we just have a relatively nice distance between our entry and our stop loss. Remember that the tighter the distance between your entry and your stop loss, the more elevated your chances of getting stopped out. The bigger the entry size, or the distance, sorry, between your entry and your stop loss, then it will reduce your chances of being pinged out by a rogue kind of spike in price or anything like that, but it will inhibit your reward to risk if you do get triggered in and it does go in your direction. So it's an agonizing choice to some, but if you want safety, you'll sacrifice profit potential, and if you want reward, a higher reward, then you do have a slightly elevated sense of risk. So there you have it. We've got potentially the first target will be a 1-to-1, so you should scale out at the point where your profit equals what you've risked, and then the second target should be around about here. You can see you've got a very strong level of potential resistance here, which acted as support all the way through 2016 and towards the end of 2017, early 2018. So that would be a good start for platinum for more aggressive play. If you did want the safety of a slightly higher probability setup, or the added confirmation, dare I say, then what you can simply do is anticipate a bullish pin bar reversal either on the daily time frame or on the weekly time frame at a point which is equivalent to the D point overlapping with this horizontal level here. Okay, so that is platinum on the weekly time frame.